Okay, for some chapter 12 exercise demonstration, let's start with 12.1, which in your textbook is on page 472, exercise 12.1. And so in this one, we're just trying to decide which journal we should record these transactions in. So we're just going to read each description and decide where we would put a transaction like that. If we sold merchandise on account, that sounds like we should put it in the sales journal. And then we purchased a delivery truck on account for use in the business. So we bought something on account, but it wasn't merchandise. This is a delivery truck, so we can't put that in the sales journal. Let's put it in the general journal. And then the next one, received payment from customers on account. Okay, so that is also very clearly cash receipts. So it's from customers on account, and it's regarding the sales. It's related to the sales, but it's the credit customers. So we're going to put it in the cash receipts journal. Any kind of cash receipts, we're probably going to put in the cash receipts journal, right? Purchase merchandise on account. All the purchases that relate to the merchandise, we're going to put in the purchases journal. And then we issued a check in payment of the electric bill. We're going to record that as a cash payment. We know what to do with that. And then we recorded depreciation on factory building. That would be not related to any of the special journals, so it has to go in the general journal. I'm going to check it and see if it's right. Yes. So it gives me the go ahead. That one's good. Now let's go to number 2. This is exercise 2, and this one is trying to get us to journalize these sales transactions. We're going to record similar to the way we would if we were recording each one individually as a journal entry, but we're recording them in the journal. And so then we're not going to post it to the ledger until the end of the period. So the first one is we sold merchandise on account to J. Adams for $2,000, sales number 488. So we're going to use these. Oh, here they want us to put the date in there, May 1st. I don't know if they care which year or not. We'll just do it this way. Sale number was 488. To whom was Adams? The accounts receivable debit, I'm going to wait to do that one because look what they told us. They said, enter the following transaction in the sales journal. Use a 6% sales tax rate. So every time they tell us how much they sold it for, they say plus sales tax. So the only thing that we know for sure when we first start is how much the sale is for. The sale is $2,000. And then if we multiply 2,000 times 6%, we'll know what the sales tax is. So 2,000 times 6% gives us $120. And again, if there were cents involved when we calculated, we would put the cents. But if it's whole dollars, it's not a big deal. If you don't want to put the whole dollars, the cents after it, if you have cents in the problem, you have to enter them or it will show it wrong. But if it's whole dollars, it's going to give you credit, even if you don't put the decimal like this, decimal 00. Either one is correct. Okay. All right, now that's the first transaction. Second one, same deal. We're going for May 4th this time. Going for transaction 489. And that is B. Clark. The amount of the sales, $1,800. So we go straight to the sales credit account. If we were making a journal entry, we would be debiting accounts receivable. We would be crediting sales, and we would be crediting the sales tax payable account. So that's exactly what we're doing. So we'll put them in those same columns. So 1,800 times 6%, I calculate it to be 108. So 1908 is the total the customer is going to owe us. It's just the total of the sales and the sales tax. And then the third transaction is on May the 4th. It's May the 4th, right? They're all in May. Not May the 4th. May the 8th. It was transaction 490. And it is this duck. The sale was for $1,500, and we have to add the 6% sales tax. So that is $90. We wind up with $1,590 that we're expecting the customer to pay us. which means it's the same thing as an accounts receivable, isn't it? And then the last date was May 11th. That is Hill, and it's transaction 491. Sales amount was for $19.50. We multiply $19.50 times 6% sales tax rate to get $117. I already calculated it. And then we add the sales amount to the sales tax payable amount to get the total amount the customer is going to pay us or owe us, $2,067. We look at it, see if it looks right. Is everything's filled in? Okay, I think it's right. Let's check my work. We look for the check marks. Yes, beautiful. It's all good. That's a sales journal. So it's just getting these exercises will get you more familiar with how these different special journals work. And then at the end of the period, we would just total this up, and the total amount that's in this accounts receivable debit column, we would tally it and put a number at the bottom. Then we would tally the sales credit totals and put a total there, and tally the sales tax payable credit totals. And then we would wind up looking at the total of accounts receivable debit and comparing that number to the combined sales credit and sales tax payable credit to see if they equal. That way we know our journal is in balance. If it is, it's okay to go ahead and post it to the general ledger account. Or like, in other words, just as if it were a journal entry, you'd post the debit to accounts receivable, you'd post the credit to sales for the total of sales and the credit to sales tax payable for the total of the payables. All right, now let's go to number 3. Be good on that one. This is a cash receipts journal. And so it says enter the following transactions in the cash receipts journal, and it gives us 5 different transactions. Darren Chesper made a payment on account of $527. And so we're going to go ahead and put the date in. Again, this is something I'm just going to push through here, July 6th. And this, the account to be credited, this is number 3. Okay. Let's go ahead and see what we got here. The customer's account is Chespero. And so the entries we would make are just the ones we would need. So most of the time, we're not going to enter anything as a general credit unless it is a cash receipt that is not related to our customer collections. So in this case, it was. So it was a customer that owed us on account $527. And so we were going to need to credit the accounts receivable and debit the cash account. And so you see why I want the debit to be first, because it's really hard for me to say the credit one first. Because I want to, sometimes I choose to do the credit first, but I know I'm putting it as a credit. So I want this cash debit column to be on the left. If any of you get a degree and start doing research and you can convince all the accounting professionals that a cash receipts journal needs to have the cash debit on the left, I would really appreciate it. Okay. Anyway, that's just silly. But anyway, okay, then on July 10th, we're going to pick that date. We're going to take this next thing that happened. Does it have a customer name in it? No, because it's not for a specific customer. It's not related to our accounts receivable. It's a cash sales of $2,470. So rather than showing it as anything to do with receivables, we're going to show it as cash sales of $2,470 and collected the same thing, $2,470. All right, so then on the third day, we have still July and the 14th this time. And this one related to Cassidy. Says Cassidy made a payment on account of $394. So that is that means that we would debit. I'm gonna do the debit part first. You know how it makes me so much happier. $394. We would debit to cash, meaning we collected that from them, and we would reduce their accounts receivable account by $394 with a credit. All right, the next thing that happened, same kind of transaction exactly, but it's on July 15th. And this one is Zoo, Z-O-U. And we're collecting on their account. So we're going to debit cash, 203. We're going to credit accounts receivable, 203. And the last transaction is on the 17th of July. We made cash sales for the week, so no entry for the account name because there's no specific customer. There's nothing in accounts receivable either. Let me do the cash part first. We collected the cash for the cash sales, $23.60, and we record it as sales revenue, which is a credit, $23.60. Okay, I think it's good. There's a chance you have to put, because I've noticed that there's a no entry there. See how that says no entry? Maybe they wanted to put that. There's a chance I'm gonna get a nastygram about these two blanks I left because they might want me to key in for that choice of no entry. So let's see what happens. Nope, they're smart. They gave me credit for it because they knew if I didn't have to put it in there if it wasn't needed. Good job. Okay, so that's 3 of the problems I was gonna show you. Now here's the one that's the big one. This one is the one that's like your Excel sheet. And I think your problem in your homework is 8B this time. And so is the Excel. So sometimes I have to use my problem for Excel, or sometimes we have to demo the same one that I'm showing you in your homework. But that happens sometimes when I don't have 2 versions of the same problem that I can do. And so I'm not sure which way it works. That could be that your homework is 8A, and your Excel is 8B. But in any case, you'll know how to do it. So I'm not worried about you. I just want you to be cognizant of which problem you're dealing with. Okay, so my recommendation would be turn in your textbook to this problem because it's on page 474. And if you don't pull open your textbook to look at it, see, I've got in my textbook already, I've got these marks all over it where each one shows that it is which journal I should post it in. And so I got a little pencil mark, you might not be able to read it on there. But what I would recommend is that you look in your textbook first and you just like put a little bitty pencil mark that you're able to erase later so you won't ruin the book. But that shows which of the 3 journals you're going to put it in, because the directive in this gives us all these journal transactions. And it says, record the transactions in sales journal, cash receipts journal, or general journal. So it's got 3 choices that we can put it in. And so I just abbreviated those: SJ, CRJ, and GJ. And that tells me which journal I think I should put it in so that I would be able to record these things with ease. Okay, so the first thing that's happening is we're gonna record the sales. So we're going to look through here. We're going to post these things and put them to whichever journal they belong in. So I'm not going to run back and forth between them. I'm going to depend on you to open your book or take a snapshot of this screen if you need to look at it on your phone or on your iPad, whatever, or print this screen. It doesn't matter. You could capture it and then print it if you wanted to, but it's in your textbook. So that's the best way to do it. It's on page 474. And so we're just going to post them where they belong. I'm not going to go back and forth. Okay, so the first transaction says on March 1st, we sold merchandise to Able & Co. $1,800. First, let me do this. Let me tell you which journal I think they need to go in. On March 1st, sold merchandise to Able & Co. for $1,800 plus sales tax, and tells you the sales number. And I put SJ because that goes in the sales journal. On the 3rd, sold merchandise to RJ Callis for $22.40, also sales journal. Then the 3rd one, Able & Co. returned merchandise from sale number 33C, which is the one we did on March 1st, for a credit. And so that's a credit memo that's going out, and we don't have a place to put that in our sales journal. So we're going to use a general journal to show that returns and allowance. That's the one that happened on the 5th. This one wants the general journal. Then number 7, made cash sales for the week. So we don't put that in the sales journal. We just show it straight into the cash receipts journal. So on this number 7, I put it in cash sales. I put it in the cash receipts journal. Then on the 10th, We received payment from Able for sale for number 33C. And so that also I put in the sales cash receipts journal. And then on the 11th, we sold merchandise to Blevis Bakery, and I put that in the sales journal. If it says you sold merchandise, it's most like on account, it's most likely, I mean, it's really the only place you can put it is in the sales journal. All right, and then if we receive payment, you can guarantee it's going to show up in that cash receipts journal. 13th is cash receipts journal. And then when you make cash sales, again, that's going to cash receipts journal. So the 14th is cash receipts journal. The 16th is another returned merchandise. So it's going to the general journal. And then the 18th, sold merchandise. So that's a sales journal. And then on the 20th, received payment from Blevins. If you received a payment, it's a cash receipts journal. Then on the 21st, we made cash sales. So that also cash receipts journal. On the 25th, sold merchandise. And on the 27th, both of these sold merchandise go in the sales journal. And then the last thing that happened, made cash sales for the week again. And that one again is cash receipts journal. Okay, so we're just going to post them in there right quick so we kind of know what we're doing. So one at a time, we're just going to take the first one's going to the sales journal, sold merchandise to Able. So we're just going to put in the date, March 1st, Able, not Able, the sale number they gave us to is 33C, Able right here. And then that was for the debit to accounts receivable was for 1944. Sales credit was 1,800. And again, I've already calculated the sales tax. They told us the sales tax rates. 8% sales tax right here in the initial data. See that? So whenever you see the sales with 1,800, you multiply that times 8%, and that's how you get your 144. And again, if you had cents, you'd go ahead and put the cents after the 144. If it had been 144 and 14 cents, I would have to put it in as whatever it is. But this is a whole dollar, and that's why I'm able to put it in as 144 or as 144.00. It's exactly the same thing, right? Okay, that's the first transaction. Second transaction, and also sales journal, is this RJ Callis. It's on the 3rd of March. I don't know if it's going to make you put these numbers in for the IDs, but I'm just going to put them in. 33D is this one. And the sale was for $22.40. And I had to include that 8% as sales tax payable. Here we got some cents on this one. $179.20. So my total accounts receivable that the client has to pay now is $24.19.20, which is just the summary of the two, the sales amount and the sales tax payable amount. So since the other two have cents on them, I'll just go to put cents on my sales numbers too, because it's easier to add it if it's in the same, line. So that decimal keeps me on track. So I could see, oh yeah, 22.40, that's whole dollars plus 179.20. That brought me to 24.19.20. Okay, so the next thing that happened was on the 5th, that merchandise was returned. So we need a general journal. This is a sales journal. We need a general journal transaction. So here's where we go for that. So this happened on March 5th. And we needed a debit to sales returns and allowances. This is just the same thing we learned last time. We need a debit to sales tax payable and a credit to the accounts receivable for that customer, Able. So we're going to debit $30, which was the amount they said they were returning. The tax on it was 8%. So we just multiply it out. $240. And we're going to credit that customer's accounts receivable for the combination of the two. Now you could do the post references. What they're looking for is the account numbers. I'll put them in here. I don't really think they're going to grade it. I mean, I don't think they'll charge you if you don't put them, but if it helps you to keep it straight, do it. Okay, so that's the first journal entry. Let me just double check it. so far and see if I got any trouble. It's a long way down there. Okay. So far, so good on the sales journal. Nothing in the cash receipts journal. General journal. Oh, it doesn't like my stuff. Ah, you see what I did? Simplest thing. For one thing, I put March 1st, and it was really March 5th. I touched the wrong number. And the other really silly thing I did was I picked the accounts payable account. This is about sales. This is accounts receivable able. Yeah, they're tricky. So now I have to click check mark again. Those are still all good. Those are still null. These, now they look beautiful. Okay, sorry. Okay, so the next thing happened after that general journal transaction on the 7th. Back to the cash receipts journal. Oh, this might be the first cash receipts journal entry. It is. Okay, cash receipts on the 7th, 3,160 that we're going to record as sales. And we're going to multiply it by 8% to get sales tax payable of $252.80. Oh, right. $252.80. And then that's going to bring us to a total cash amount of $34,12.80. And this was for the sales for the week, and it's dated March 7th. Okay, that should be fine. Okay, and then on the 10th, another cash receipts journal, we received payment from Able & Co. for the amount on the invoice of 33C minus the credit memo. Okay, so what we're going to do is on the 10th, I'm going to record the date. I'm going to mark Able is who it relates to. And then we're going to post the collection amount of how much we got from them. 1,911.60. We're not going to record any more sales because we already have recorded that earlier whenever we showed the sale. This is just a collection. And it's the net amount after we credited them back for that refund. Okay, so that was the 10th. Then on the 11th, we sold some merchandise. So we're going to go to sales journal. March 11th. And it's transaction 33E. Blevins. And how much is it? 1210 is the sales amount. It's got any cents on it. Yep. So I'm going to put the cents because when you calculate 1210 times the 8%, you're going to come up with 96.80. Then you add that to your sales amount to see how much the customer owes you total. 1306.80. So that's good for the 11th. Then on the 13th, we received payment. So we're going to cash receipts journal. Look at that. I picked the wrong date again. My finger touched the wrong one. Sorry. You should use your mouse. Totally not doing that, but it's really smart. And this was on the 13th. So this was cash payment from Callis. And so it was for the total that he owed us 24. Oh, let's put Callis' name in there. 24.19. And that's the amount of cash we got too. Okay, so far so good. Now the next thing happened on the 14th, we made cash sales of $4,200. Let's go in the same cash receipts journal, isn't it? And we're going to multiply that times 8% to get the tax. Happen to be an even number this time. So the total amount we collected on those two combined, $45.36. And that, those two meaning the sales tax and the sales itself. And that was on the 14th. Everybody's cool? If you have trouble, you'll go back and study some more, or you'll rewatch the video, right? On the 16th, the other thing you can do is you're not getting it quite clear. You need to go back to the previous chapter where we learned how to record a sale or how to record a collection and see if these accounts are agreeing with whether or not we would do a debit or credit when we collect from someone. Okay. Because you'll see that they do. On March 14th. Then on March 16th, we're going to the general journal again because we have returned merchandise. Okay. 16th. All right, what we've got on the returned merchandise, we're going to do the same entry again, but this is just for a different customer. Sales tax returns and allowances. No. And then sales tax payable. And accounts receivable, Blevins. This time we get it right. So we can put those same account numbers in, or we can leave blank and see if they're going to give us a fuss about it. All right, so they are returning. This says they're returning $44 worth of goods. So we're going to just debit the sales account, because when we recorded it originally, we would have credited sales. When they return it, we debit sales returns and allowances. The sales tax related to it is 8%. So $44 times 8% gets us $352 is what the sales tax related to it is. So we're going to reduce their balance that they owe us by a total of $47.52, which is just a combo of the return plus the sales tax related to it. That's got us the 16th. Now on the 18th, we sold merchandise to RJ Callis. So this is going to be in the sales journal on the 18th. What's the count? What's the number? Number 33F, not E. F, Callis. And how much was it? $26.20 is the sales amount. Multiplying it times the 8% sales tax will bring us to $209.60. And we add the two together to get the total amount the customer owes us, $28.29.60. It looks right. Okay, then the next one on the bottom of page 474, the last entry on the 20th, received payment. Okay, so cash receipts journal on the 20th from Blevins Bakery for sale number 33, less the credit memo. Okay, Blevins. And so once we get to the point after we adjusted for their return, we're going to see their balance is $12.59 and 28 cents. That's the amount we're showing as cash collected also. Okay, so now we got the whole first page. We just lack the second page. So let's go ahead and do a check my work and see. Okay, where are you? There it is. See if we're okay. Uh-oh, trouble right here. Evidently, I keyed something in crazy right there. On March 11th, in the sales journal. Yeah, 1306, not 1316. So this is why check my work is such a beautiful thing. And then here's one here on March 13th, $24.19 and 20 cents. Both times. So I dropped the 20 cents accidentally. It's probably because I wasn't doing whole dollars some of the time. Okay, now let's try one more time. See if it's going to give us some good check marks all across the board for what we've done so far. Yes, we're all good. Okay, so now we're going to the top of the next page. We have 4 more entries. We made cash sales. Okay, so that's cash collected. For sales, here's cash collected. Cash receipts journal, $2,400 on March 21st. Okay, so sales, $2,400. And then the 8% related to it is $192 for a total of $25.92. Okay, that's good. Now on the 25th, we sold merchandise to Blevins. So this is sales journal. 11. So while I got that card, I'll just write him in. And it was on the 25th. The entry number was 33G. And the total amount of the sale was $19.15 without the sales tax. Multiply your $19.15 times the sales tax of 8%, and you'll get $153.20. You can add that to your sale to get the total that the customer owes us, $2,068.20. Don't drop that 20 cents again. Okay. Yeah, that looks good. And then, well, why not say March 18th? March 25th is when that happened. Okay. Then another transaction that's also sales journal, the Thompson Group sale, is for 2016. Thompson. And it was transaction number 33H, sale number. And it happened on the 27th. And so now we need to multiply our sale times the 8%. And we get $161.28. Add that to our sales price, and that gives us the amount the receivable just went up by, $2177.28. That's how much we're debiting through the receivable account. Okay. And then we have one more transaction report, made cash sales for the week. So that's cash receipts journal. And that happened on the 28th. Why? Okay. Cash receipts journal, sales were $3,500. And the sales tax on it was 8%, $280, for a total cash debit of $3,780. So we've recorded all the transactions. Now the next thing to do is tally up how much the totals are of these journals so that we can post these to these accounts for these different accounts. Like all the sales together are going to be tallied up right here. The accounts receivable in the sales journal is going to be, if you add all these up, I already have the total here. See, and here's where you once you see that all the rest of them had zeros, probably to get yourself in line where you can add them easier, just go and add your zeros. Probably I should have had them the whole time, then you wouldn't have to wonder where the decimal should go. But in any case, add all the whole column of accounts receivable debits, and you're going to come up to $12,745.08. Then when you add all the sales column, you're going to get $11,801 even. Then if you go to the sales tax column and add all these, you're going to come up to $944.08. Add them together now, the two credit columns, 11,801 plus 944.08. And if you come back to 12,745.08, then you can say, yes, that works. So this has to be posted to these three accounts. Accounts receivable needs a debit of 12,745.08. If we can find it. 12,745.08. See if that's the one they posted first. They posted the general journal first. So they're going to put this as the third entry. I'm going to move it because I don't want to give me a glitch just because I did it in a different order. And I don't want you to get a glitch. So I'm just telling you, they did the general journal first, then they did the sales journal. Okay. And so that posted to accounts receivable. We're not going to do our subtotals yet because we missed a couple of journal entries. We still have to add those in first. Okay. And so this other two accounts, the sales, maybe I should do the, that's okay. It's all right for that one to be the first one. I think I'll go ahead and do the general journal first. That way I don't have to keep wondering whether I should have posted it first. All right, sales returns and allowance is taking a debit of $30 and another debit of $44. This is just posting from the general ledger, from the general journal into the ledger accounts. March 5th. And the other one is March 16th. Those both came from the general journal. And so they put a post reference here of journal page 5. And when they put the J, that means general journal for them. And so both of them were on J5. I don't think they're going to count off if you don't put those. But so when we do the subtotals, we would be at 30. And then when we add another debit of 44, we'd be at 74. Okay, so that's your ending balance for sales returns allowance because it's the only 2 transactions we had to them. Now, sales tax payable took 2 debits during the general journal. See that? On the 5th, it was a $2.40, and on the 16th, a $3.52. So let's go sales tax payable. Oh, come on. There's got to be one. Okay. Okay, sales tax payable had a debit of $2.40 and another debit of $3.52. This is weird because right now they don't have the transactions posted since they did their journal entry first, their general journal first. I would have put the sales first, but it's okay. This is what they did. So I'm going to stick with their method because I don't want them to give us a glitch because of the order we put it in. All right, so it's going to be a credit balance account because it's a payable, but right now it's going to be in the debit until we get everything posted, or until we get the sales posted actually. Okay, that's got those 2 parts of the entry done. Oh, the general journal. Okay, go back to it. And then these are account numbers we've just been posting to. You see that? And so we posted the sales returns allowance and the sales tax payable. Now we're going to post the accounts receivable that relates to these. On the 5th, we had a credit of $32.40, and on the 16th of $47.52. Both of these are from the general journal. So we're going to put J5, journal page 5, and the date on the 5th and the 16th. And that is just to get all the journal entries posted. So the credit balance was $32.40 after the first transaction. Then we added the second credit of, I need a decimal right there, $47.52 for the second entry. You know why this is wrong? This $32.40 over here? Because it already had a balance in it. Look at this. It has a debit balance of $1,058.25. So we have a debit balance of $1,058.25, and we're adding to it a credit. If we put another debit to an account, it means it would increase that debit balance that's already there. But if we credit the account, we're reducing the balance of that accounts receivable by $32.40. So we reduced it from $1,058.25 down to $1,025.85. And that's just because $1,058.25 minus $32.40 will bring you to $1,025.85. So now our balance is $1,025.85, and we're going to reduce it by $47.52 to bring us down to cumulative balance at that point, $478.33. And the reason all this is working this way is because if you have a debit balance and you post a credit to it, then you're reducing the balance. So now we have our other entry that we brought from the sales journal here too already here. We just make sure we're clean on all this other stuff. We did the entire general journal. It's all posted. I'm going to put these post references just because now they got me freaked out a little bit that they might put a nastygram on me. For a 1, you have to watch what you're doing because you could easily make a little error that gets you to X, even though you understand what you're doing. Okay, so we got the general journal posted. Now the next order they posted the general journal, then they posted the sales journal. So the sales journal right here, I had already posted this entry right here, 12/7/45. You see that? I posted that to accounts receivable. And so we're going to go back to the accounts receivable account now and say, okay, now where's this going to go? This is the sales journal. And you see the sales journal is on page 6. So when we go to post it into accounts receivable, we're going to use that reference. S for sales journal, page 6. And we're going to put the date as of the last day of the month. So when we post that 12/45/08 as a debit, it means it's going to increase our balances going forward from 978.33 debit to increasing it by another debit of 12/7/45. That'll bring us to a cumulative balance of 13/7/23/41. So that's our ending balance after just posting that piece of the sales journal. Okay, we're not quite done. We'll get there eventually. Now the sales journal's next post amount is the sales entry for account number 401. It's also going to be sales journal page 6 for 11,801 to sales. Okay. Sales 11,801. It's happening on the last day of the month, and it's the sales journal page 6. And there's no transaction in sales yet posted, so we're going to just put the total back over on the total so far, the credit balance on the account so far. Okay, everybody's cool? All right, so let's do the last piece of our sales journal. We posted this accounts receivable debit. We posted this sales credit. Now we need to post this credit to sales tax payable, 944.08. Right here. Okay, so it's coming in at the last day of the month because it's coming from the sales journal page 6. And it's going to be a credit, sales increasing a payable, always a credit. And if you had any question about it, you look at that journal you just looked at to see that it said at the top, make sure you see it, credit to sales tax payable. That's how you know where to put it on a credit or debit side when you post it to the general ledger. Okay, sales tax payable, it took a credit. Now look over here. Your sales tax payable at this moment has a debit balance of $592. That's kind of erroneous because that's not really going to happen that way. If our sales were already posted, it would have just reduced our sales tax payable. But in any case, we have a debit balance and we're adding a credit balance to it. And our credit balance is a lot bigger. So we're going to end up with a credit balance of $938.16. So what we do is when we have a balance that is in a T account or a columnar ledger like this, the same thing as a T account. Whenever we have a balance going forward and we post another entry to it, we look at the two and take it to the side of the larger. So when I see that I'm posting a credit that's bigger than my debit, I know I'm going to end up with, I'm going to net the two out because they're on two separate sides, and I'm going to put it on the side of the largest. So that's why I wound up on the credit side, and that's why I wound up with 938.16 because I netted out 944.08 and 592. Just the net, when you add those two opposites together, is 938.16. Okay. So what happened is now it's just as if the sale came in first to be posted at 948.08 and these two credits reduced it because that's really what happened. It was returns on some of these sales that were included in this 944.08 sales tax payable. Okay. All right. So now we've posted all of our general journaling. Now we posted all of our sales journal. We just have to post our collections and we'll be good. Cash receipts journal. So we're looking at these. We don't have anything in the general credit column for this time. That's exciting. So we're going to total up the other columns. The cash receipts journal total for accounts receivable collections is $5,590. 0.08. 5,590.08. And that's just the total of these three transactions right here that are posted as credits. And then the total sales credit, the credit to the sales account, is the total of these four entries that we posted here. So it's going to be a total of 13,260, no cents. And then the sales tax payable credits, the total of these four credits that we have posted, that we have listed here or entered here in our cash receipts journal, the total is $1,060.80. And then if you tally all the cash debits together, you're going to wind up with a total of $19,910.08. And so now we look at it before we post these, we're going to look at it again and say, let me add those three credit columns together. The 5590.08 plus the 13,260 plus the 1,060.80, and those three together should bring me to the total I have as a credit to the cash, as a debit to the cash account. Sorry. And so when you add the three of them together, you do get 19,910.08. So you know, once you see that it balances and the total of all the debits is the same as the total of all the credits, then you say, okay, it's ready to post now. So let's post it to the general ledger for these accounts. We'll first go to the cash account just because I like to do cash account first. And I like to do debits first in particular. So a debit to the cash account of 19,910.88. $19,910.88. And this happened on the last day of the month because we're pulling it from a journal that's for the month of March. And we're going to call this the cash receipts journal, page 9, because that's where I'm pulling it from. Cash receipts 9. Okay, now I've got this one is cash account has a debit balance and I'm adding another debit. So I don't do that netting thing. They're both debits. So it's just becoming a bigger debit now. 9,741 plus 19,910.88 brings me to my ending balance in cash for that is 29,651.88. So that's got that one under control. Now I go back to my cash receipts journal and I look for what else should I post. I posted the cash. Let's go post the accounts receivable credit, 5590.08. Accounts receivable credit, 5590.08. This is going to it's coming from the cash receipts journal. It's posted on the last day of the month. So then I just have to tally my account. I have a debit balance account, 13,723.41. And now I'm posting a credit to it. So if I have a debit balance account and I add a credit to it, I post a credit to it, that means I'm going to reduce that debit. This credit I'm posting is eating up some of my debit balance. So I'm going to be left with a debit balance of only $8,133.33. So now I've posted the cash I collected from my cash receipts journal. I've posted the accounts receivable reductions. Now I'm going to post the sales credit, which is the credit to the sales account showing the cash collected from sales. And I'm going to post it as a credit for 13,260. 13,260. It's coming from that cash receipts journal on the last day of the month. So this sales account has a credit balance of 11,801. You see it right there. And I'm posting another credit to it. So there's no need to net anything. They're both credits, just to add them together. So 11,801 plus 13,260 is going to bring me to a balance of 25,061, no cents. Okay, everybody's good? Going back to our sales receipts journal, we have just one more thing to post. Sales tax payable, there's a credit of 1,060.80. This is the amount that we need to increase the payable by. That means that's why we're crediting it. 1,060.80 to sales tax payable. This is coming from the cash receipts again. This is on the last day of the month again. We've got a credit balance, 938.16. We're posting another credit to it. So no netting, just add them together. It's only reason you offset the two is if they're not the same. If there are two credits, add them together and put it on the credit side. If they're two debits, add them together and put it on the debit side. But if one's a debit and one's a credit, net them out and then put them on the side of the largest of the two. Okay, so I got a 938.16 plus a 1,060.80 for sales tax payable. That's going to bring me to an ending balance of 1,998.96. Now, hopefully I didn't key something in wrong, but there is a chance that my finger slipped and I put the wrong thing. So I have to do and check my work, right? And I'm hoping for a bunch of check marks. Please give me check marks. Hey, that was pretty. Look at this. How did I get this one? My total for my cash receipts journal. You see what it is? It's 8 right here. It's supposed to be 88. That's going to throw my journal entry off too a bit because I pulled it from there. Let's see if I got it right when I put it over there. All right, and then my general journal, all check marks. Let me see what account that was. The cash. Okay. If cash is good, that means I keyed it in properly. Yeah, okay. See, I got the 88 right here instead of 08. Okay, sorry about that. Just looked down and back up and didn't remember the number. Okay, so that it's really easy to do some simple little things. Yeah, this should have been March 31st. My finger touched March 30. Okay, but as you're going through, this is why it's good to have check my work because you can see some small little thing that it's not mean that you didn't understand, but it's triggering you to say, hey, look at that one again. Okay, so now we have gotten all the postings to the general ledger, and the only thing left to do is record these same transactions that happen to the individual accounts to the subsidiary ledger for accounts receivable. So that's where we're going now. There's just 4 different clients. So I'm just gonna key them in because what you have to do is go to the same cash. You'd go to your sales journal and post each of these to the different customers' accounts. And then you go to your, well, the order they did it in, they went the sales journal, then they did the general journal, and then they did the cash receipts journal. That's the order they put it in. So if you wanted to make sure they're going to give you a correct answer, I would put them in that order. So I'm just going to post the different things that were affecting these customers in the order that I just mentioned. So sales journal first, and it was on page 6, remember? And then I'm going to do the journal entry. And then I'm going to do the cash receipts entry. And so the dates of the ones that affected Able are March 1st. The reason I'm not chasing back and forth because that would just take so much time, but you are going to need to do it, but it's totally within your realm of understanding at this point, especially when you see me do it. Excuse me. Okay, so you're using the very same transactions, but looking at only the ones that apply to Able. So you pulled one transaction for Able from the sales journal, and it was this 1944. And that was where we first made a sale to Able. And now they owed us an accounts receivable of 1944. And then we came along and they returned some of the merchandise. And so that was $32.40 that it decreased. It's only the parts that decreased that applied to Able that affected the accounts receivable account. And so then the last transaction was the collection from them, 1911.60. So the balance as you went along was at the beginning, they owed us 1944. And then after the credit, they owed us 1911.60. And then after their payment, they didn't owe us anymore. And that's the end of it. That's Able. Then you go along to Blevins. The transactions related to Blevins, if you look back on the 11th, we have a sale. And it was on page 6. And then the journal entry on the 5th. They went in, they didn't go in a specific order. They did it on date order. Sorry about that. I should have known that. Or I should have thought about that. I wish they would have gone that way on when they posted their others, but they didn't. Okay, 25. These are just date order. So ignore the fact that I said they posted them in these certain orders right here and just do them in date order. Okay, so this was the cash receipts that happened on the 20th and then another sale. Okay, so the first thing that happened is we made a sale to them that affected their accounts receivable account, and they owed us $1306.80. So that's off their balance was at that point. And then they returned some of the merchandise right here. And then we're not trying to make all this up again. We're just looking back through all the times that we posted to accounts receivable related to these people. And that brought their balance that they owed us to $1259.28. And then they paid us $1259.28. So they owed us nothing. Then we made another sale to them and we posted it to the sales journal. And that's where we stood at the end of the month. So they hadn't paid us everything they owed us. They're still in our accounts receivable. So Collis, the next one. There was 3 transactions to Collis, and the first one happened on March 3rd, second one on the 13th, and the third one on the 18th. The first one was a sale, page 6. Second one was cash receipts, and the third one was another sale. Okay, at first they owed us $24.19.20. There was no returns based on theirs. $24.19.20. And then they paid us that exact amount, $24.19.20. So they owed us nothing. And then we had another sale to them for $28.29.60. And now I'm not making this stuff up. These are all recorded in our sales journal, our cash receipts journal, and if they had a return, it would be recorded in our general journal. But every time it would say it would be related to Abel, or it would be related to Blevins, or now Collis. Now the Thompson group, only one transaction happened relating to Thompson, and it was on the 27th. We made a sale to them. They owe us for it, and they still owe us for it at the end of the period. $21.77.28. And since I have trouble talking to you in bubblegum, I should go back and make sure that I didn't enter anything crazy in this accounts receivable. So maybe I won't get any nasty grams with those little X's. So let me just double check this by my record of what happened with these to make sure it's looking right to what I thought it should. Okay, I think Abel's right. Looks good. I think it's right. I'm always confident though, you know, a little key slip with my fingers, and it's just so shocking to me when I do that. But it's okay. It happens to all of us sometimes. Okay, that looks good. I think those are good too. And then, of course, the other thing that I did do one thing wrong. Oh, look at this. All these had no beginning balances. Abel, Blevins, Collis. Look at Thompson. Is there any balance really $2,177.28? No, they had a beginning balance. If they owed us already $1,058.25, and then we charged another $2,177.28 to them, that means now they owe us the total of both of them, $32, $35, and 53 cents. Good thing I double checked that. Okay, and then let me just double check my dates here. 18, 16, 20, and 25. First, 5th, and 10th. Okay, it's good. I'm ready to check my work. Let's see. I hope it's going to be nice to me. Okay, let's go to the very top. Make sure I got check marks galore. Looks good. Yep. All the journals, total green. That's good. Now let's look at this general ledger. Yeah, looks pretty. Yep, general ledger's great. Accounts receivable subsidiary ledger. Let's see if we got check marks on it. Yeah. we got it right. Good. So now we just ready to submit this baby. It's all good. So you guys are ready to do your homework.